What's up everyone, my name is Ale. Welcome back to my world of stocks. So I've been getting a lot of requests to review JD stock, which is a pretty popular Chinese e-commerce company. So in today's video, we're going to do an analysis on the company, their performance, and the stock. And at the end of the video, I'll let you know if I plan on buying JD stock anytime soon myself. So with all that said, let's go ahead and get started. All right, guys, let's kick things off by doing a quick intro into their company and the business. Like I said, this is a Chinese e-commerce company that is mostly involved in business to consumer operations rather than Alibaba, who also mixes in a lot of business to business and consumer to consumer offerings. Instead, JD takes on the responsibilities of the products themselves and sells them through their JD Mall platform, but also offers their services to third-party customers, including logistical services, advertising, and e-commerce websites and mobile applications to reach Chinese consumers. But speaking of Alibaba, which by the way I am invested in myself, many people assume that Alibaba brings in more sales because they're a bigger company by literally hundreds of billions of dollars of market cap and are generally a much more popular stock among investors. But in fact, JD is the one that brings in higher sales. In their last fiscal year, JD actually brought in over $10 billion in sales more than Alibaba. However, the reason why investors have flooded more into Alibaba is mostly because they have been consistently profitable by billions of dollars a year, while JD technically loses hundreds of millions of dollars in comparison. To be fair, many of the bulls would argue that JD reinvests in their business to sustain high revenue growth, similar to what Amazon did back in the day. In fact, their sales have climbed by 34%, 49%, and 21% in their last 3 years respectively. And while that growth has been slowing down a bit, it's still expected to climb by 15% this year and another 17% next year. Keep in mind that this is during one of the most difficult times in China's economic history. In fact, their GDP growth has slowed down to its lowest quarterly level in nearly 3 decades as the trade war with the United States rages on. Still, JD may already be on the right track, as they actually posted positive GAAP net income in 3 of their last 4 quarters, and that's expected to continue improving in the future as their EPS is projected to grow by enormous amounts this year and the year to follow. Again, this is despite a trade war between the 2 largest economies in the entire world that is likely dragging down the Chinese consumer and Chinese businesses right along with them, which JD relies heavily on both by selling products to consumers and offering third-party services to many businesses. But as a result of JD performing well recently despite the headwinds, the stock has skyrocketed by over 40% so far this year, leaving them near the top of their 52-week range at just slightly above $30 a share. However, if we zoom out to get a bigger picture, we can see that they really fell off a cliff last year, right along with many other Chinese stocks in the market, as they dropped from north of $50 a share to now trading for around $30, leaving them still down by around 40% from those highs, even despite the fact that they've been rallying so far this year. As a result, the valuation has become a lot more reasonable, as the high EPS growth is leading to their PE ratio improving from over 200 trailing to just around 25 forward. That is a huge improvement that may be finally getting the recognition that it deserves. Still, if JD really wants to become a more sustainable company, then there's a few things that are gonna need to happen. Now, for one, I often hear people compare JD to Amazon and say that the profits will come later on, but I think one thing that they kind of leave out is that Amazon didn't really become a profitable company as a result of their e-commerce kind of online shopping platform. It was mostly because of their more profitable kind of higher margin businesses, like for example their cloud computing platform called Amazon Web Services, which has really skyrocketed in recent history, not just in terms of revenue, but also in terms of profitability because of its higher margins. And we've also seen similar things happen to Amazon because of their online advertising business that has also been really taking off, and in the future that will also be a higher margin business as well. And that's really how Alibaba has also become profitable over time. They are also one of the world leaders in cloud computing, especially in the Asia Pacific region with Alibaba Cloud, and they also have a booming online advertising business as well. So that really begs the question, what does JD have going on for themselves? How much potential do they still have in e-commerce, and what other areas are they tapping into for more growth and profitability in the future? Well, to explain that, we're going to have to dig a little deeper into JD's business so that I can show you how JD stands out over the competition in China and what they're doing to really stay relevant in the future as well. So let's go ahead and do that now. Well, the path that JD has taken is to build up their website and supply chain to own one of the most advanced e-commerce platforms, ecosystems, and infrastructures in the entire world, using a combination of robots, artificial intelligence, big data, and machine learning to help attract merchants and advertisers and to automate their entire supply chain as much as possible. They even built the world's first automated warehouse in Shanghai and are already developing their own drones, robots, and autonomous vehicles to make deliveries even in the hardest to reach areas of China. This is extremely attractive to third-party companies who need to hire JD for these type of services, because where other companies fail to deliver, JD is the one picking up the slack thanks to their large investments in their infrastructure over many years. All of this ambition and innovative technology has led to them becoming the largest retailer in China by revenue, with hundreds of millions of active customers, and what they claim to be the largest delivery infrastructure in China, with 600 warehouses, and to carry a delivery success rate of over 90% of orders being delivered by the same or next day, which is really damn impressive considering how many difficult to reach areas there are in China. And this is something that they claim no other e-commerce company in the world can match. And by the way, they don't just sell Chinese products. JD actually allows sellers from all around the world to access the Chinese market without even having a physical presence there. So yes, JD is primarily an e-commerce company, but they're also one of the largest logistical companies in China as well. And by taking control of the products and logistics themselves, as opposed to Alibaba relying mostly on third parties, JD is able to control their sales, customer experiences, and customer satisfaction themselves. Because of this, they're able to collect enormous amounts of data that advertisers find very useful. And by the way, a new partnership with Google gives them access to even more data. And that, coupled with sales from all of their other services, has led to JD generating more revenue than Alibaba, even though Alibaba technically has more B2C e-commerce market share according to China Internet Watch, where they still sit well ahead of over 60% market share, while JD lags behind at a little less than 25%. Still, I believe that there's plenty of room for multiple players in the game. In fact, the Chinese e-commerce market has been burning red hot in recent history. Last year, their online sales grew by almost 24%, breaking north of 1.3 trillion US dollars. That's an insanely large market, yet it still only made up less than 19% of all retail, which by the way is also growing faster than the United States given the rising middle class in China. And again, this is during some very difficult economic times, so one would assume that these numbers can improve even more once a trade deal is done and their economy starts to stabilize and possibly even improve. Meanwhile, online advertising sales are also soaring in China, as they're expected to grow north of 20% this year and make up almost 70% of all media ad spending, which bodes very well for a giant e-commerce company like JD that has plenty of digital advertising real estate to sell. Not to mention that very lucrative deals in recent history with giant companies like Tencent, Walmart, and Google, who by the way are all invested in JD themselves, have only expanded JD's reach and given them a stronger hold on not just the Chinese market, but even a growing presence overseas as well. Either way, my personal opinion is that anyone who is not investing in the Chinese e-commerce market is probably making a mistake. And when I look at what are the safest investments in that space, in my opinion, I think Alibaba and JD.com really stand out as the two kind of top leaders there. So the question then becomes, do you invest in one of these companies or both? And for me, I've already decided that investing in one is good enough, and I don't really see the need to invest in both. There are many lucrative markets in China to invest in, so having one pure play on the Chinese e-commerce market is really good enough for me. Now, I am still very bullish on all of the growth prospects in China, but I don't want to be overexposed to China either, and that's for many different reasons that I've covered in past videos. But I'm actually thinking about doing more videos on that, so if you'd like to see videos on the risks of investing in certain markets and certain kind of countries and things like that, then let me know by hitting the like button. I'll be sure to do that. I think right now I'm really thinking about doing one for China and their whole kind of VIE structure. I did a video on that in the past, but my channel wasn't that big at that time, so it didn't get a lot of views. So I'm thinking about doing kind of an updated version. So let me know if you'd like to see that. But as someone who already owns Tencent and Alibaba, which by the way are two positions that I'm really looking to make into very large positions over time, I just don't really feel the need to buy JD at this time. Because at the end of the day, I feel like those two companies give me a ton of exposure to China already. If you don't know about like Tencent, for example, you should look into those companies, because Tencent and Alibaba, they're giant conglomerates that have their toes kind of dipped in everything. Now, you could ask the question of why I chose Alibaba over JD, and I think the fundamental argument between those two companies in particular is that on the JD side, they potentially have more upside potential given the much lower market cap. So JD's stock would have to climb a lot to really be at the same kind of level as Alibaba. So you could kind of look at it as there's more upside potential for JD because of the lower market cap. But when you look at Alibaba, it could be argued that they are a much more diversified, giant Chinese conglomerate company that gives you exposure to some other areas as well. So if you really want a more direct kind of pure play on China's e-commerce and logistics markets, and one with a much smaller market cap, then maybe JD is the better pick. But if you're someone who likes to have a more diversified company that has proven to be sustainably profitable already and still has massive potential in the future, then Alibaba might be a little bit of a safer pick in that regard. And in my opinion, that's kind of where I fall in line with this whole kind of argument. I think that Alibaba is the safer, more diversified, sustainably profitable company, and I still believe that they have a ton of upside potential. I think both have a lot of upside potential, but I just like Alibaba as a company a little bit more. But also, I should mention that I believe Tencent owns around 20% of JD.com. So because of that, I already have some exposure to JD through Tencent. So that makes it an even easier choice for me to continue to invest in Alibaba, because I already own some Tencent, which owns some JD. So I kind of own all three in that regard, but I really just see it as investments in Alibaba and Tencent, even though I do have a kind of indirect play into JD as well. Either way, I think you should expect all of these stocks to remain volatile in the short term, because right now we still have the trade war going on between the US and China's economy is still struggling. So expect these stocks to be very volatile, but keep in mind that these stocks are still performing pretty well during one of the most difficult times for China. So if things really turn around, if you're someone who is optimistic about China's future, then these companies could potentially perform very well in the future. So I think you really have to have a long-term kind of mindset with these stocks. Now, for me personally, I've mostly been buying during very down days. Like this whole year has been pretty volatile because of the whole trade war. Sometimes we have positive news come out, sometimes there's negative news, and that really drives the market a lot of the time. So whenever there's a lot of pessimism in the market, whenever there's a lot of negativity and stocks are selling off and people are panicking, those are my favorite times to buy, especially with Chinese stocks like I've been doing with Alibaba and Tencent. So I'm just kind of letting you know that, because I expect the volatility to continue at least until a trade deal is done and we start to see some stability. Either way, that does it for this video. I hope you guys enjoyed it. If you did, make sure you hit the like button. It really means a lot to me, and hit the little notification bell, because that really helps with YouTube's like algorithm and everything like that. I don't think subscriptions really matter as much as actually hitting the notification bell. So if you don't mind doing that, it really means a lot to me. But anyway, thank you so much for your time and for watching the video and for all of your support. I hope you all have a wonderful, beautiful day and that you take care. Bye-bye.